Hi there and welcome back to Dummy's Guide to Investing, and this is our how-to series where we take a look at everything online and give you an easy visual format of the Dummy's Guide, or essentially the Cliff Notes of how to do different things online when investing. So right now we're taking a look at stock graphs. We are looking at the different kind of stock graphs out there and how to read them. Sometimes when you look at this, it can be kind of daunting. What are all these things here? You see all these different lines and these colors and these compare and indicators. It can be a little bit overwhelming. So we're going to go and break down each of the different kind of basic stock graphs that are out there, and typically what the most common ones are and how to read them. Because once you start to learn what all of these little lines and these ticks begin to mean, then and just at a very quick glance, a trained eye can see everything they need to know about a stock by its graph. So right here we are on tradingview.com. It's a great stock graph platform that we use and that we integrated into our own websites with Market Masterclass and Dummy's Guide. And you can sign up on the links through our websites if you want to sign up as a membership, but they also have a great free service as well. So right here we're looking at the Apple Inc. Now everybody is familiar with Apple, and this is the 1 year stock graph for Apple. Now this is we're actually talking about right now is bars. What we're looking at is bars. You can look up here. You can see these are the different kind of graph that they feature, and these are the most common graphs out there that you'll find: bars, candles, lines graphs, Renko, line break, Kagi. Now each one of these has different features, and you know, some people prefer one particular stock graph over another. So we'll break down each one of these in different segments. Right now we are talking about the bar graphs, which is probably the most commonly used. Now, even for the untrained eye, you can take a quick glimpse at this and kind of get a general idea of the movement of the stock over the course of the year, right? Trading at one point as high as 124, down to its year low, which is down around $90. So you can see there's been some volatility over the year with Apple. But what does these mean? Of course, you've got your green and you've got your red little bars here. You've got these little lines that are protruding out on the left and the right of each bar. So what does this mean? And at a quick glance, how can this benefit us as a potential investor, or if we're doing our stock research? So let's go ahead and zoom in, and let's pick one of these little bars that are easy to identify so we can explain it. So let's take this one right here. As I drag my cursor over it, you can see that this was September 14th, 2016. You can see that the stock was a big jump upward here, and that was obviously a good day for Apple. So what this means is, now this green obviously means that it was positive, right? But it's more than just that. See the little line that sticks out to the left here? That was the day's open. This is where the stock price opened at the beginning of this day's trading. The little line out here to the right was the close of the stock price at the end of the day's trading. And the line that goes up and below or above these little entry and exit points, or the starting and ending points, was the day's volatility. So at one point on this day, in September 14th, it may have closed right here at $111.76, but at one point it had traded as high as right here, $112.98. So this will give you a quick indication of the day's volatility and the definite movement of the stock in general, if it had closed higher or closed lower than its opening. So when you move over to the next day, obviously it's still on a upward trend here, but the next day you can see now the starting point was right here at 115.08, but it closed slightly lower. Even though it had a 1 point traded higher, 116.13, it actually closed lower than it opened, which makes it turn red. Now this bar is now red, which shows that it actually closed lower than it opened. And same can be applied for the next day. It opened slightly lower than the day's previous close, but then closed quite a bit lower here at 113.57. So at a quick glance, you can see not only the movement of the stock over the course of a year, but you can see the open price and the close price and the day's volatility. So that pretty much sums up the bar graph. It's quite simple. It's easy to understand. The other thing that you want to take note of this particular stock right here is down below. Now you can see the red and the green bar graphs down below here, and this indicates volume of trading. So same rules apply. On a green, that you can see that it was higher volume than the previous day, and the red will apply. But you can see on major movements during this ticker, obviously the volume is always higher, whether it's red or green. So the red volume is of selling, and the green volume is of buying. The E here would be the estimated earnings reports, and the actual earnings reports and how it came out. For instance, this was a surprise of a 1 cent above estimate, and dividends, of course, is the D. So quick glance, you can get an idea of where the stock is. And then there's, of course, as we get into deeper ones, you can look at different ways to analyze this stock and look for certain trends. But we can get into that in later segments. So that's it for right now for the bar graph. To sum it up, green indicates the day when the stock price ends higher than it opened, and red is the opposite. A stock price ends lower than it opened, and of course volume down here below, which is applies to pretty much all charts. So there you have it, guys. Thank you for joining us. Do stay tuned for our next series of charts, where we will be talking about candles, both candles and hollow candles. So thanks for joining us here at Dummy's Guide to Investing, and as always, we are with you every step of the way.